So I'll start the recording I've started. So IES 16, property, plant and equipment. So IES 16 is one of the key standards. Please let's take notes. One of the key standards that we cannot joke with in the whole of ICANN, because there are so many standards that are very attached to it. There are so many standards. And as I usually say, in your question in ICANN, if I can set 7 questions, sure they will set group accounts, set cash flow, set publish account, set ratio analysis. The remaining 3 questions, they will set at least two standards. They will set at least two standards. At least. Sometimes they set three, sometimes they set four. So which standard are they going to set? We don't know. And that is the reason why IES 16 is very, very important. So there are so many standards that are very related to it. So where do we start? I said in our statement of financial position, we have the assets and liability and the equity section. So in our asset section, we all know that we have two types of assets, right? We have non-current assets and current assets. It is only IES 1 that defines non-current assets and current assets. So IES 1 defines current assets as assets that are that you can realize within 1 year. An asset that is liquid in nature, that whenever you want to convert it to cash, you can realize it within 1 year. So why IES 1 defines uh, non-current assets as assets other than current assets. That means asset that you can use or you can realize for more than 1 year. So now that's statement of financial position classification. So another classification is we have tangible assets and intangible assets. Another classification is we have financial assets and non-financial assets. When you get to your professional stage, no. ICANN has introduced IAS 21 to your syllabus, and we are going to do IAS 21. IAS 21 discuss about monetary assets and non-monetary assets. Then we have financial assets and non-financial assets. So when the time comes, we are going to be discussing about that. But where we are going today is tangible assets. So IES 16 defines PPE as a tangible asset that are held for administrative purpose, production of goods or rendering of services or rental to others that are expected to be used for more than one accounting period. Now, this is where we are going. I have a car. I have a car. Mrs. Tolani have a car. Gloria has a car. Miss Aisha have a car. Miss Gloria has a car. Everybody has a car. But the motive of owning my car, why did I buy my car, is different from each other. Me now, as an individual, I bought my car for administrative purpose. In my organization, I take my car to bank. I'm an accountant. All accountants usually go to bank because of transactions. So I am an accountant. I have what? I have a car. I take my car to bank. I take it to FIRS. I take it to pension office. I take it to NSITF office, ITF office. So I will say that my car in my financial statement is a PPE because it is for administrative purpose. Now, let's now move to Mrs. Tolani. Ms. Tolani has a real estate company. A real estate company, they deals with property. They buy and sell property. Sorry, we are talking about car. Now, Ms. Tolani owns a auto business. An auto business, they are company that sells car. They sells car. Like their business motive on a daily basis, they sell car. They sell Toyota, they sell Camry, they sell Benz to everybody. So in the financial statement of Mrs. Tolani, motor vehicle will not be a PPE. Motor vehicle can never be a PPE. It will become an inventory. If you go to their financial statement, motor vehicle is going to be an inventory. Why? Because they are selling car. That's their business. In their ordinary course of business, so they are selling cars. So, we get it. You see that there are two different things. Me, I have my car, I'm using it for administration. So, what I'm saying in a nutshell is that for you to define an asset, you have to look at the motive. Why do I buy this asset? What is my motive of holding this asset? Which is the most important thing? So that is the reason why I said when you look at the definition of PPE, and I know this is skill level, application is not usually done in skill level. When you get to your professional level, standard usually test using application. They will set a scenario for you. They will combine IAS 16, IAS 40, IAS 20. They will combine them for you. They want to know, maybe you understand what is PPE truly. And for final level to be very easy, that is the reason why your skill level must be very strong. So that's the definition of PPE. A PPE must be a tangible asset. What is tangible? In accordance with IAS 16, tangible means something that you can touch, that you can see, something that you can feel, something that is tangible. While intangible is something you cannot touch. When we get to IAS 38, I'll discuss more about intangible assets. And I will give you an example that you now know that intangible asset, you cannot see it, but it is an asset. So that's, by the way, that's the definition of IAS 16. Now, there is something important I would like everybody to know. There are some standards that are very related to IAS 16. Number one is IAS 40. IAS 40 is very, very close to IAS 16. And that's the reason why I quickly said something that, note, property held for rental purpose is an investment property. What is IAS 40 is saying? When you have a property, which is land or land and building, or building that is held for rental purpose, it is an investment property. But when you have a tangible asset, that means plant and machinery, office equipment that is held for rental purpose, that one is PPE. But when it is property, please, let's take note of what I highlight. All those things I'm highlighting, they are key. They are very, very key. All the things I highlight, anything that you see that I highlight, please, if it is not clear, let me know. All the things I highlight, they are very key. So I have said it earlier, a PPE must be a tangible asset. Number two, it must be used for administrative purpose, production of goods, and rental to others. And it must be used for more than one accounting year. That is very, very key too. For something to be a PPE, it must be used for more than one accounting. It is a must. When you have something that is tangible, that you cannot use for more than one accounting year, please, it is an inventory. Please, it is an inventory. And let's quickly write it down. I said it in yesterday's lecture, but you can write it down now. I want to list some standards to you that are very related to IAS 16. I'll list them out. If you have your jotter, please note it. But if you don't have your jotter, don't worry. When you are listening to your recording, you will write it down. So number one is IAS 40. Are we writing? Standards that are very related to IAS 16 that you must read for you to understand IAS 16. Number one is IAS 40. Number two is IAS 2. Number three is IFRS 5. IFRS 5. Number four is IAS 20. Accounting for government grants. and disclosure of government assistance. That is number 4, IAS 20. Then number 5 is IAS 38, intangible asset. Very, very similar to IAS 20. Very, very close to IAS 20. So I want you to add 2 more, that the requirement of that standard is needed in IAS 20. Number 1 is IAS 23, borrowing costs. Borrowing cost is very, very related to IAS 16. You need the requirement of IAS 23 for IAS. Just add it to it. Then add IAS 37 to it. IAS 37 to it. When we get to the bridge, we finally cross it. I will explain why you must add it to it. Then for the last thing, let's add IAS 36, impairment of assets. You must add your impairment of assets too. Just add them to it. So can you see that IAS 16 is very, very important? Can you see standards that are very close to it? It is very, very important. Now let's move to classification of property. So now when we have a property, as I've said earlier, I use auto vehicle the other time, that I own a motor vehicle that I'm using for administrative purpose. Now let's move to property. Now property can be classified into different assets depending on the reporting entity's motive of acquiring the property. Please, this is very, very key, and that is the reason why IAS, those standards are very related to IAS 16. Number 1 is inventory. If a property is held or acquired for sale in the ordinary course of business, example, real estate firms selling lands and property. So when you have a property, a land or building, or land and building, in the financial statement of a real estate firm, it is an inventory. It will be an inventory because they sell it in their ordinary course of business. Their business motive is to sell land. Then B, if the property is held for administrative purpose or production of goods or rendering of services. Example is factory building, plant for production, head office building. That is a PPE. Why did we buy that property? We bought it for administrative purpose, or we bought it for production of goods or rendering of service. Then investment property, if the property is held for rental purpose. When we buy a property and we want to be collecting rent or capital appreciation, it is called an investment property. Then 4 is non-current asset held for sale. That means a property we are using as administrative purpose. We now decided to sell it, or we now want to convert it for sale. That is IFRS 5. Very, very related to IAS 16. So that is it. So it depends on how your motive of holding property for you to see the property is a PPE or an investment property. Now, examples of PPE. Number 1 is land held for administrative purpose. Number 2 is land and building held for production of goods and services. Now, let me quickly ask a question. Before we go. When I have a land and building that is held for rental income, is that a PPE or an investment property? Look at this, my example too. This, our mic is muted. Our mic are unmuted. We can talk. My example 2, land and building held for production of goods and services. That's PPE. I now said land and building held for rental purpose. Is it a PPE or an investment property? Hello, who is talking? Miss Aisha, Miss Gloria, Miss Tolani. Who is talking?
Please, sorry, Mr. Asata, please, the
Investment
question
income.
again. The
Ah,
question again, please.
I said land and building held for rental purpose. Is it a PP or an investment property?
Investment property.
Okay. Do we all agree that it's investment property?
Yes, it's investment property for rental.
Okay. Why? It's for
For
rental,
rental.
Abi? Okay.
Yes.
Okay. Thank you very much. So we are on the same page now. It is investment property, it's not a PP. Now, machinery. Machinery held for administrative purpose or production of goods or rendering of services. That is a PPE. Motor vehicle, just like my example, for administrative purpose or production of goods or services is a PPE. Office equipment held for administrative purpose. Those are the example of PPE. I can see some question in ICANN in skill level that examiner will just ask you to list something. I will not say, eh? So all these example, please don't let us joke with it. There are some free mark that we just earn. So let's move on. Let's move on. We don't have time. Recognition criteria, because we have one past question we need to solve. So recognition criteria. Recognition criteria. So what is recognition criteria? Recognition criteria is when we remember our conceptual framework. That's our chapter 6. Is it chapter 6? No, chapter 5. Chapter 5 of conceptual framework is recognition criteria. Measurement is chapter 6. Presentation and disclosure is chapter 7. And chapter 8 is capital maintenance. That's our chapter 8. So please don't let us joke with conceptual framework. They are setting it every diet. They are setting it. Sometimes the worst part is that regulatory framework and conceptual framework, they will set like 7 mark, and it is a bonus mark. A bonus mark. Please, let's read them again. If you cannot read them every week, twice in a week, read those conceptual framework and regulatory framework again. I remember in my 2021 exam, when I did my FR in 2021, the first question I did was conceptual framework because it's a bonus mark, because I read it very well. So I will say it again. Please, conceptual framework, regulatory framework, they are your bonus. Read them. Now let's go to recognition criteria. Recognition criteria, for you to recognize an item in your financial statement, the standard gives you criteria. You can't just buy an asset today and you just put it in your financial statement. The standard will tell you, no, there must be something before something. They said there is a saying that there is no smoke without fire. There is no smoke without fire. Or is it there is no fire without smoke? You There's no smoke without fire. There's no fire without smoke. All of the above. Let's use it like that. Let's use it like that. Let's just use it like that. That for you to do something, there must be something. You can't just sit down and just do something. There must be a reason why. So for you to recognize an asset, there must be a recognition criteria that must be met. And that is what I want everybody to take note. In all the standard you'll be doing, there are recognition criteria that you must know. If you don't know it, please cram it. Just like one of my lecturers said, cram it. Because those recognition criteria, in the exam, they will come out. They will come out. So recognition criteria of IAS 16 is very, very similar to the rest. The moment you understand the recognition criteria of IAS 16, you will be remembering the rest, which is like an expo for you. And that's the reason why you must cram it. So now, recognition criteria of IAS 16 is that the asset must be tangible in nature.
the asset must be tangible in nature. You cannot just buy an asset now that is not tangible. You now call it PPE. The standard says you are a big liar. That asset, it must be tangible in nature. It must be very tangible in nature. So that's number one. Number two is that it must be probable that future economic benefits will flow to the entity. That means that asset must bring income or cost generation to the entity. That income, that asset must generate income. Example is what? Example is when you buy a motor vehicle. Motor vehicle for administrative purpose. Motor vehicle for administrative purpose is a PPE. Why? Because instead of you to be spending money for Uber, you must do what? If you have your motor vehicle, you will be saving costs. So that is cost reduction. It is called cost reduction or cost savings. In context of IAS 16, it is cost savings. Let me change it. Although it's cost reduction, but it is called cost savings. Cost savings or income generation. There are some assets that will bring income. Example, what? Example is factory building. When you build a factory that you are using, that the business is using, that factory, you are now producing goods. Maybe when you produce the goods, you will sell it happy. That is income generation. So for you to call something an asset, it must be probable. This probable means there is high chance that that asset will bring economic benefit. So economic benefit is income generation or cost savings. Hope that is noted, everybody.
Yes, it's okay.
Okay, ma'am. So the third one is the cost of the asset must be reliably measured. That means the amount you buy the asset, you must reliably measure it. And how? When you buy an asset now, there must be a receipt. So you know the cost. So when the three recognition criteria are met, you can recognize a PPE. So when we are now talking about recognition, there is when to recognize and where to recognize. When to recognize is this. This is when to recognize. But where to recognize, it's your presentation. That where can we recognize our PPE? Let me throw out that question. Where can we recognize it? In the statement of financial position or P or L, where do we recognize our PPE? Where?
Financial statement, sir.
Statement of
Financial statement of financial statements. Balance
of
sheet.
what?
No
Balance.
current
I don't want
asset.
balance.
Statement of financial position.
Position.
Thank you. Gloria.
Military
You are not using
number. Sorry, it's not to
old
escape
name
my
for
head.
the wala. So it is statement of financial position. So it is recognized in the statement of financial position under where? Is it under current asset or under non-current asset? That's another question.
Non-current.
No current asset.
Yeah, thank you
No
very
current
much.
asset.
So under the non-current asset. So when somebody asks you, where do we recognize PP? That is it. So that is recognition criteria. When are we going to recognize PPE? Those are these three. But where is in the statement of financial position under the non-current assets section. So now let's move on. Measurement of PPE. We have spent 30 minutes. So we have 30 minutes more. By 6 o'clock, we must solve that past question before we end class. So let's move. Measurement of PPE. Now, when we are talking about measurement, how much are we going to put in our financial statement? How much? We have all agreed that what? That where we are going to put our PP is inside the statement of financial position. We have all agreed that fine. But how much are we going to put there? It is the standard that will tell us. Because why? If the standard did not tell us, there will be a problem. I cited an example. I bought a plant. That plant that I'll be using to produce 50 million naira. I now use transport. And now I have a big trunk. Those big trunk that will help me carry it 1 million naira. That will help me carry it from that place where I bought it to my company 1 million naira. So if I am a lawyer or a doctor or a journalist, if they ask me that, please, how much is that plant that I bought? That lawyer will tell, it's 50 million, I bought it to. He will never, if that person is a very, very intelligent, the person will ask, although I spent 1 million naira, I spent extra 1 million. I spent extra 1 million for transport, for transporting that trunk to my company. So I can say it is 51. I can say it is 51. It will not be very sure. But as an accountant, IAS 16 says, no, you can never say it is 50 million naira. Your cost of that PP is 51 million. You will say it at the first, when that question is thrown to you, like you say it immediately, 51. Why? Because the standard has given you guide. Now, for you to determine the cost of PPU, there are some costs you will add to it. That adding to it is called capitalize. You'll be saying, are we going to capitalize it or expense it? That cost that you add to the cost of your asset is called capitalization. Capitalization. So the cost, the measurement of PPE, we have initial measurement and subsequent measurement. And this is very, very key. Please, let's take note. When we are doing all the standard in this life, you'll be hearing initial measurement, subsequent measurement. Initial measurement is on day one. On the day one, that is why they call it initial. On day one, the first week you buy the asset, how much are you going to input in your financial statement? Then subsequent measurement is at the end of the year, at the end of year one, when you are calculating your depreciation. You remember that one of the characteristics of PP is that it must depreciate. So at the end of the year, when depreciation comes in, that is when you call it, that's when they talk about subsequent measurement. So initial measurement, when you buy the asset, so IAS 16 says all items of PPE must be measured at costs. All items of PPE must be measured at costs. That means how much you buy it. Except what? Now you now take note, except for government grants. That is why I said IAS 20 is very related to IAS 16. Government grants, IAS 20 is accounting for government grants and disclosure of government assistance. There are some times, although not in Nigeria, when my lecturer taught me that standard, when they explain it very well for me, I don't think it is Nigeria they are talking about too, because I don't know. Let me just laugh myself. I don't know where government will give you grant to in Nigeria. Government did not know you, not know anybody in government. They will now give you grants that you should go and buy assets, you go and construct assets. Ms. Tolani, am I wrong? Miss Gloria, Miss Shaisha, is it possible government will give you grants in Nigeria that you should go and buy an asset? Yeah? Is it possible? Maybe I'm wrong. So, because accounting standard emanates from UK, it emanates from UK. So there are some standards that are not applicable in Nigeria. One of them is accounting for government grants and disclosure of government assistance, IAS 20. Another one is what is IAS 19 when you get to your final. Another one is IFRS 2, share-based payment, where you buy goods. You buy goods and services. Instead of you to now pay money, you are now issue out shares. You now say, I will give you shares. It is very, very rare in Nigeria. But in UK,
is very common. So there are some standards that are not common in Nigeria. One of them is accounting for government grant, IAS 20. So where am I going initially? Where I'm going is that when you have a PPE, that you are not the one that buy it, it's government that give you grants. At initial measurements, please don't measure it at costs. Please don't measure it at costs. The standard IAS 20 says you should measure it at fair value. And that is the reason why, for you to say you understand IAS 16, you must read IAS 20 very well. So is that taken, is that noted? That initial measurement, is that fine? Can we move on?
Yes, sir.
Okay. Now, cost of PPE, as I said earlier, all PPE must be measured at cost. So as I've said, using that example of 50 million naira plant that I bought, I said what? I said that plant, for me to say the cost of the plant, I would say it is 51 million naira because I am an accountant, I'm not a lawyer. There's only a lawyer or a doctor that will say, I bought it 50 million. Although I spent 1 million naira to transport it. So I can say it is 51. But an accountant, you go straight, the cost is 51. Why? IAS 16 has given us guidance that for you to determine the cost of PPE, you pick number one is that the cost of the purchase. That is the number one. The cost of purchase. Number two is that non-refundable taxes. Please, let's be very careful here. What is non-refundable tax? What is refundable tax? There are some tax that when you pay it, the government is going to refund it to you. Example is your VAT. There are some sectors that when you pay VAT, that is VAT output, you are going to recover that VAT. It will become VAT input. But what IAS 16 is saying that non-refundable tax, there are some tax that you can never refund. They can never refund you with back. When you pay it, you have paid. Also, VAT is part of it. Then we have custom duty. When you pay custom now, you pay tax or duty. You cannot refund it again. No, it has gone. No. You add it to it. Professional fees. Maybe a professional that help you get that PPE. You add it to it. Installation costs, transport costs, testing costs. For you to determine maybe the asset is doing very fine. There is cost of testing. Now, present value of dismantling costs. These are costs. Like when you go to IAS 37, I will discuss more about it. There are some costs that you have to incur in the future. That cost, it is in the future you will incur it. To do what? To restore that asset back to the normal place, back to the normal state. Back to the normal state. You have a contract with that person that in 5 years' time, after I use this asset after the useful life of this asset I'm going to restore it. It usually happens in projects where organization will go to another state or another country to carry out projects. So instead of them to now buy a land and construct a building, they will now lease it. They can lease it for 10 years. So in that situation, at the end of 10 years, you have to dismantle that property and restore that land as it is. So that cost is called decommissioning cost. It is called restoration cost or dismantling cost. So you must, since it is a cost you will do in the future, you pay in the future, you have to find the present value, you discount it from future to present using 1 plus R raised power minus n. If you remember your PM very well. But when we are solving question on IAS 37, I will show you how this is. It is very, very simple. Don't worry. So the last one is less trade discount. We have two types of discount. Please, let's be very careful. We have cash discount and trade discount. IAS 16 does not talk about cash discount. IAS 16 talk about trade discount. What is cash discount? Cash discount is a discount given to you when you make prompt payment. You are owing one person 10 million naira. The person now say, if you can pay up within 1 week, I'll give you a discount of 5%. I'll give you a discount of 5%. And 5% of 10 million naira is what? 500,000. So if I can pay up within 1 week, I'll pay 9.5 million. That is cash discount. But trade discount is a discount that will be given to you in bulk where you buy a large volume of product from your supplier. Maybe when you buy like 1 million products from a supplier, you usually buy 1 million. Your supplier is now saying, if you can buy 2 million, I'll give you a trade discount. So that is a discount. That's the difference between a cash discount and trade discount. So IAS 16 talks about trade discount. So you are going to less trade discount from it. So any other directly attributable cost of bringing the asset to the present location. So that is it. Any other directly attributable cost. Please, let's take note. Any other directly attributable cost. So when you add all of them together, it will be your total cost of PPE. So as I've said, I don't know, maybe I said before that acquired PPE and self-constructed PPE. Self-constructed PPE and acquired PPE, please, they are different. Acquired PPE is the PPE you buy yourself. But the self-constructed PPE is the one you construct. So that is self-constructed PPE. So if you look at the cost of self-constructed PPE, you will see that cost of direct material, cost of direct labor, cost of direct overhead. So all these costs, it will be different. Why? The reason why is that we constructed this one. Why the second one, we buy it? So I want to ask a question. General administrative overhead, is it going to be the cost of your PPE or not? General, if you see my cost here in the self, I said cost of direct material, cost of direct labor, cost of direct overhead. If I have general overhead, is it going to be my cost? Is it going to be my cost? Hello? Are we still together?
Hello, Mr. Taufik.
Yes.
Yes, sir. Yes,
General overhead.
okay.
Like allocated
I just want
overhead.
to try.
Yes, yeah, try me.
Okay, I just want to try. Me looking at the name general.
Yes.
It does not, I mean, they didn't apportion it directly or allocate it to a particular, it's been generalized. So I don't think that it's been generalized.
So are we going to capital? Are we going to add it?
So I don't think that it will be. I don't think that we're going to add it to.
Yes,
you are correct. Generalized.
Yes, because either we construct these assets or not, we will spend that money. If you remember your PM, very well, it is called relevant costs. A cost that you will incur whether you did the project or you not do the project. You are not going to add it. Because if we decide that, okay, we are not constructing again, maybe I'm the one that I say I want to construct building. Okay, I will not construct again. You still incur that general administrative overhead. You still incur it. So it will not be at any cost that you incur that is not directly attributable to that project is not going to is not going to be included. So non-refundable taxes, professional fees. Now the next one is borrowing costs. Borrowing cost is IAS 23. It is borrowing cost is like an interest cost. We are constructing our project. We are constructing our PPE now, maybe a factory building or something. We now went to the bank to collect loan. We went to the bank to collect loan. Now, do you know that bank is not going to give you loan free of charge? When bank is not a fool, they will collect their interest now. That interest is called borrowing cost. So IAS 16 says that borrowing cost, that interest that you pay on that loan, you should capitalize it. You should add it to the cost of the assets. You should add it to the cost of the assets. That is what IAS 16 is saying, that you should add it. If your asset is 50 million naira and you spent a borrowing cost of 1 million naira, please add it to it. Once that asset is a qualifying asset, that is the clause. And what is qualifying asset? IAS 23 defines qualifying asset as an asset that necessarily takes substantial period of time to get ready for use. Asset that takes substantial period of time. Asset that before you complete it, you take time for you to complete it. So that is borrowing cost. That is borrowing cost. So that is it. It will be added, the installation cost, transport cost, testing cost, then dismantling cost too, as I've explained earlier too. So when we add all this together, it is total cost of the PPE. That is initial recognition. So when we saw this past question, when I saw this past question, I saw a question like that, and I'm going to send an assignment in the night. I want us to try it on our own. That question deals with cost. I want to recognize, maybe we can recognize cost that we can capitalize or not. I will send that question to you guys. It's an assignment. Let's do it. Now, subsequent measurement. So subsequent measurement, as I said earlier, it is the cost. It is after 1 year. What will be the cost of the asset after 1 year? So IAS 16 says we can either use cost model or evaluation model. It depends on accounting policy of the organization. If you like, use cost model. If you like, use evaluation model. So cost model is the historical cost. The carrying value will be your historical cost of the PPE, less accumulated depreciation, less accumulated impairment loss. If you remember very well, you know, when we are doing impairment, I said, what's the difference between depreciation and impairment? And I explained the difference. So when you deduct your accumulated depreciation and accumulated impairment loss from the costs, it will give you your carrying amount. That is otherwise known as net book value. When you deduct your accumulated depreciation from accumulated impairment loss from the cost. Now, revaluation model. This is the revalued amount being the fair value as a revaluation date. Revaluation model. What revaluation model is saying that you are not going to recognize historical cost again. You go and revalue it. Less subsequent accumulated depreciation, less subsequent accumulated impairment loss. Please, let's take note of this. When we are dealing with valuation model, it is subsequent accumulated depreciation, less subsequent accumulated impairment loss. But when you are doing the cost model, it is only accumulated depreciation and accumulated impairment loss. Hope that is noted. Please, let's take note. So when you are using revaluation model, it's going to result into upward revaluation and downward revaluation. So upward revaluation is that I revalue my assets 100 million. Then my carrying amount immediately before revaluation is 80 million. That means when I did my before I revalue, my carrying amount was 80. Then my revalued amount is 100. Maybe we have a surplus. That is called revaluation surplus. That's what I highlighted here. It is called revaluation surplus. Revaluation surplus. Because my revalued amount is higher than my carrying amount. And IAS 16 says you are going to recognize it in OCI. When we do publish accounts, you will see what is OCI, other comprehensive income. That's where you put your evaluation surpluses. Go. Except when it reverses previously recognized evaluation deficits. At all time, please let's take note. Our evaluation surplus will go to OCI. But there are some time that it will not go to evaluation surplus. I explained this when we are doing impairment, if you remember very well. When we are doing impairment, that something happened, but we do not put it in evaluation surplus because there is a evaluation deficit. We will go and cancel it. Do you remember when we are doing with impairment reversal? If you remember very well, when you take your note again, you will carry it again. Please, let's go back to our note. Downward evaluation is when your revalued amount is less than your carrying amount. It will result to revaluation deficit or fair value loss. They call it fair value loss or evaluation deficit. It is to be recognized in the P or L, except when it reverses previously recognized surplus. Evaluation deficit, when your revalued amount is less than carrying amount, you have a evaluation deficit and you take it to your P or L. So that is subsequent measurement. Let's go on. Now, IAS 16 talks about depreciation. What is depreciation? Depreciation is the systematic allocation of depreciable amount over the estimated useful life. Its useful life, sorry. What is this depreciable amount? Depreciable amount is simply means something that the value that can be depreciable. That means the cost minus residual value. That is your depreciable amount. So when you systematically allocate that depreciable amount over the useful life, that is your depreciation. Now, the standards also talks about commencement of depreciation. Commencement of depreciation. When you look at it now, that asset that I bought for 50 million, when are we going to start depreciation? The standard tells us that it is not that deal. I buy an asset on Sunday, I will not start depreciating on Sunday. No. The standard tells us that depreciation starts when the asset is available for use as intended by the management. When the asset is available for use as intended by the management. Now, method of depreciation. So let me throw out this question. I remember we all did depreciation. How many methods of depreciation do we have? We have so many methods of depreciation. Who can remind me? Miss Tolani, Miss Gloria, Miss Aisha. Amina is here. Amina is not here. Okay.
Reducing balance
we have
method.
and a straight line method.
We have straight line method. We have reducing balance method. Which method do we have again? Miss Aisha, which method do we have again? Apart from that, Miss Tolani, Miss Gloria, apart from reducing, balancing, and straight line, which method do we have? Do we know again? We have.
There's evaluation method.
There's no evaluation method.
There's depletion method.
There is what? Maybe I did not hear very well.
Method.
Depletion, Abby. Depletion method.
although there are so many types of depreciation, but the common one is straight line, reducing balance, then sum of the year digit method. Sum of the year digit method, then production unit method. Production unit method. That production unit method is usually used for machines. There are some manufacturers, they are going to tell you that this machine, the useful life is 5,000 hours. You know, 24 hours make one day now. 24 hours make one day. 24 hours make one day. Let's now say 24 times 5. I think that's 120. 120. That's 5 days. Some manufacturer will tell you that the useful life of this machine is 120,000 hours. That after 120 hours, 120,000, you have to change the engine for it to continue to function very well. So we have production unit method. Another method is the one Nigeria told us, depletion method. Although there are so many methods of depreciation that when we consult engineers and these guys, they are going to tell us. But we are accountants. We don't have business with all those ones. The major one that we need are these 4 ones. Sum of the year digit method, straight line method, reducing balance method, production unit. Then there's one again that is very popular, I've forgotten. But to our class now, let's just limit them to those 4 methods. Now, the standard did not give us method of depreciation that we should be using. If you remember when we did our years 2, you know, we have so many methods of value inventory. We have FIFO, we have LIFO, we have weighted average, we have simple average, we have so many methods. But the standard says the only method that you must use in years 2 is what? Is FIFO, which is FIFO method, and weighted average. The only method that LIFO is not recognized, all those one, simple average, it is not recognized. Hello? Are you saying something?
No.
Okay. So, method of depreciation, the standard did not give us any method of depreciation. The standard just tells us that the depreciation method should reflect pattern of consumption. So it depends on the pattern of consumption of that asset. That's the depreciation method we should use. When you are using a machine, it makes sense to use a production unit method. When you are using an asset that is very, very straightforward, you use a straight line. So the standard does not specify the method of depreciation. Now, cessation of depreciation. When is depreciation going to cease? So depreciation ceases at earlier date of what? Of when the asset is derecognized. That means when an asset has been sold or the useful life has elapsed, we are going to derecognize that asset in our financial statement. Or when an asset is classified as held for sale in line with IFRS 5. So when we classify an asset as held for sale, depreciation will cease. You are not going to depreciate again. That asset will become current asset. You transfer it, you reclassify it from non-current asset to current asset. When we get to IFRS 5, we will discuss more about that. And that is why I'm saying that these standards are very, very related to IAS 16. We must understand and read it. So, recognition of depreciation. Where do we recognize depreciation? Originally, depreciation is recognized in the P&L account as an expense, right? Sorry. Depreciation is recognized in the P&L as an expense. However, there are some circumstances whereby the depreciation will be capitalized as part of cost of another asset. Example is depreciation on assets used for production of goods should be capitalized. That means should be added. Instead of you to expense depreciation, you go and put it as cost of another asset. Example is factory machines. Factory machine, the machine you are using in your factory. The depreciation will not go to your P&L. It will go to that cost of machine. So that is what they are saying here about recognition. So let's move on. Land and building. Now, we should all take note that land and building used for administrative purpose is a PPE, right? Yes. However, for the purpose of depreciation, land is not a depreciable asset. Why? Because it is very difficult to estimate the useful life. However, land is depreciable whenever it is leasehold land. You know, I said it that we have two types of land: freehold land and leasehold land. Freehold land is normal land, but leasehold land, a land that you lease it. You lease that land. You lease that land from what? You lease the land from another person for maybe 10 years. For maybe 10 years. So that is it. That in that case, the land will be depreciated based on the last lease tenure, lease term. So for the purpose of depreciation, land should be separated from building. So when you want to depreciate, you must separate your land from building, because land is not depreciable, but building is depreciable. So for the purpose of depreciation, land should be separated from building, even though they are acquired together. Please, let's take note. Let me highlight it. It's very, very important. We must not sleep over it. We are out of. Okay, where are we? Now, burial plants. There is a standard that deals with. Please, let's add to it standard that relate to IAS 16, IAS 41. IAS 41. Biological assets. That standard is related to IAS 16 to biological assets. IAS 41. So it is in IAS 41 we will know about burial plants. So we have two types of plants. We have consumption plants and burial plants. Burial plants. Then we have burial animal too. So IAS 41 discuss about burial plant. So burial plant is what? It's a living plant that has the following characteristics. It bears agricultural produce. It can be used for more than one accounting year. The likelihood of being sold is considered to be relatively scarce. It's relatively remote, sorry. So example of cocoa tree, mango tree, rubber tree, palm tree. So IAS 16 says that when you are an agricultural business, when you have a mango tree, you have a cocoa tree. Please, it's not a biological asset, it is a PPE. Please, let's take note. Burial plants, it is a PPE. Why? Because it meets the definition of PPE. It can be used for more than one accounting period. It can be produced for more than one accounting period. So burial plant is not a biological plant. When we deal with IAS 41, I will discuss. IAS 41 is very, very interesting. It deals with agricultural business. All the agricultural produce, all of them, all this cow, how do we account for it in our financial statement? We will deal with it when we get to IAS 41. But in a nutshell, burial plant is PPE. IAS 16 revised require that burial plant should be classified as PPE. It is not a biological asset. Burial plant. So we have burial plant, we have burial animal. Then we have a consumption plant and consumption animals. So that's by the way. Now we have componentization. Now, componentization as I've said it earlier, we have so many type of assets. So componentization means it arises when we have complex assets. There are some assets that are very big, that the part is very, very big, that they have different type of parts. Example is what? Aircraft. If you look at aircraft, aircraft has wing, aircraft has the place in which the passenger are going to sit down. So what they are saying is that when you want to depreciate, since it has a lot of different parts, are we going to depreciate it? How are we going to depreciate it? Because the useful life are different. The useful life of engine of aircraft is different from the wing. It's different from other parts. So that is where componentization comes in. Componentization arises that when IAS 16 says that when you have a complex asset having different useful life, you should depreciate that on a component basis. That means part by part basis. The engine will be depreciated differently. The wing will be depreciated differently. Other parts will be depreciated differently because they have different useful life. It's not like a car. When you have a car now, and the manufacturer told you that this car, the useful life is 10 years. The useful life is 10 years. That is it. But when you have an aircraft, the manufacturer will tell you that, please, the engine useful life is 20 years. Why that wing? That one that has wing, it is 10 years. Why this parts? Because it has a lot of different parts, different useful life. So componentization comes in that we should depreciate on component basis. We should not depreciate everything together. We will depreciate differently. So example are ship, heavy duty equipment. They have so many parts. So that is where componentization works. Now let's move. We are almost done. Now subsequent expenditure. I buy a property. No, I buy a machine this year and I use for 5 years. Now at the end of year 5, I now buy an engine. That engine is going to do what? It's going to improve that machine very well. Am I going to capitalize it or expense it? That is what is called subsequent expenditure. So IAS 16 requires that subsequent expenditure should be capitalized if it prolongs the useful life of the assets. If at the beginning of the year we estimate that the useful life is 10 years, but when I now buy that new engine, the engine will now make the asset to use 15 years. So I'm going to capitalize that engine. I will capitalize it. Or if it enhances the economic performance of the machine, that means the machine is more effective, I will capitalize it. So any other expenditure, any other subsequent expenditure that do not fit in with these two will be expense in the P&L account. Instead of you to take it to non-current assets as part of it, as you capitalize it, you now take it to expense because it does not meet these two criteria. So there are other things. We have repairs and maintenance. I have an asset now. I now repair, I now maintain it. Those things are usually problems that we have a generator in our company. We now do maintenance, we repair it. Are you going to capitalize it or expense it? So IAS 16 gives us guideline that repair and maintenance should be expensed in the P&L account. You should not capitalize it. However, when it's some major repair that are not regular, that means it is once in a while repair that will enhance the performance of that machine, IAS 16 says that we should capitalize that repair and maintenance if they are not regular. So the rest, we have major inspection and overhaul. Just like that repairs and maintenance, it should be capitalized. it should be capitalized if it is one-off. If it is one-off, because they are not incurred at regular interval. But if it is major overhaul that is incurred on regular interval, this you will expense it. So IAS 16, that's all about IAS 16. So there is some assignment that I want you to do. Disposal of PPE. What is disposal of PPE? What is residual value of PPE? What is the recognition of PPE? And disclosure requirement of PPE. That's your assignment. And that assignment should be snapped to my WhatsApp.
So do we have any question before we move to past question? Are we fine? 6:15. Okay, I think I can use 45 minutes from that past question. Any question? Ms. Tolani, Ms. Gloria, Ms. Aisha, are we good to go? Can we proceed to the past question? Or do you have any question? People have left the call. Or have I muted you?
No questions, sir.
Let's proceed to
Okay.
the first question.
Okay, thank you. So if you have any other, let's proceed to the past question. Let's proceed. So where is this one now? Sorry. Where is this one? Okay. You can see my screen like this, Abby. This is people on my screen. I'm trying to. Oh shit! I'll be forced to present my entire screen. I'll be forced to present my entire screen. I don't understand why this is like this. Oh my God! Why? Oh. Okay, stop sharing. Let me stop sharing. Then let me present again. Okay, we are done with our year 16, right? We are done with this PDF. Let me close this PDF. This thing is wasting my time here. Oh, save. Okay. This thing is just wasting my time here. Okay. So, can you see my screen now? Okay. This thing usually have problems sometimes. Screen sharing is all this one. So this question is November. Yeah, is it November? May. November 2020. November 2020. That is this question. So it is the only question that they tested. They set question on calculation. The rest, they just ask recognition criteria and the likes. So now let's look at it together. Noodles Nigeria Limited manufactures various type of noodles in Oluyole for sale across the states in Nigeria. Recently, to contain the sustained leadership of the company in the Nigerian market, on 1st September 2015, a brand new machine was bought from the supplier under the following condition. Now, the question number one I will ask, now, that September 1, 2015, is it the initial measurement? Is it the initial recognition or subsequent recognition?
Initial recognition.
Initial recognition. Thank you very much. Initial on day one. Now, subsequent measurement will be what? At the end of year one, Abi. That is it. Now, they now give us figures. Suppliers invoice price, trade discounts, and the likes, all of them. So all figures assumed to be correct. Now, if you remember our initial measurement, there are some costs we will capitalize, there are some costs we will expense, Abi. This is where we are. But let's move on. Let's move on, please. All figures are assumed to be correct. Now, estimated useful life of the machine in output and units are given as follows. Output / unit. At the end of year one, the unit is 1,000. They gave us the estimated useful life of the machine. Can you see? 5,000. That 5 million, sorry, 5 million. That means the machine is going to produce 5 million units. So in this case, which method are we going to use? Is this straight line method or sum of the year, or sum of the year digit method, or reducing balance, or production unit? Which method are we going to use?
Straight line, sir.
I said, when we see this question now, they gave us, if we want to calculate depreciation, that's one of the things I said earlier. One of the characteristics of PPE is that it must be a depreciable asset. Whenever you hear a PPE, you must depreciate it. Now, in this question now, it's talking about machine. Now, which type of depreciation are we going to use? When you see this question, which method of depreciation do we think we are going to use?
Straight line.
Which method of straight line?
But I think it should be given in the question.
It will not be given, no.
Oh.
Hey.
So anyone that's really,
that's what I'm saying.
Mm.
That's what I'm saying. Is it not last week that I said it, that ICAN exam? And that is the reason why I usually advise people, don't read ICAN on your own, no. Don't do ICAN on your own, no. Please, you need somebody that will.
Okay.
You should not like. Yes, they are not going to give you in the exam hall. They will just give you figures. They will give you some information. It is you that will know the method that will, and that's the reason why I'm throwing that question out. And that's the problem in ICAN, that they will not say, question will just be tough. You have to know it. That's why I'm asking you that. Which method are we going to use? Mrs. Gloria told me that I'm going to use straight line. When I'm seeing machine output units, estimated useful life.
Let's use reducing balancing method.
You will not use reducing balancing method, though.
Okay. A bit production, you say?
Some of the
method. They are giving you information. Can you see? They say the estimated useful life of the machine in output and unit is 5 million. So they are giving you information. They will not tell you.
Production unit method.
Yes, that's the method you will use. Nobody will tell you. Nobody will call you in the exam. Miss Gloria, it is production. You have to think outside the box. That is ICAN for you. They see you as a professional. You are not an ordinary accountant. And that's the difference. You think outside the box. Nobody will tell you. In fact, that's why I'm saying that your foundation should be very strong in skill level. When you get to your professional level, nobody will tell you the standard. You know, this is IAS 16. When you get to your professional level, nobody will tell you that this question is IAS 16. This question is IFRS 15. Nobody will tell you that this question is IFRS 5. By the grace of God, we will see by then. God will grant us long life. I will now remind you, Shibi, I told you that how you know that this is IAS 16? Nobody will tell you. It is the information, and that is the problem of ICAN. You have to think outside the box. Nobody will tell you the information. Nobody. So please, let's move on. And that's the reason why yes.
Okay, no, I just want to ask a question. Let's assume that
Yes,
someone used reducing balancing method. Does that mean that person has already missed it outrightly?
Exactly. You have missed
Wow.
it all.
Hmm.
Is zero, no. Is zero. Although the way they structure the question,
Okay.
all the 15 marks. Example, this question, I think this question is 20 marks. They set like 8 marks. We look at it together now. 8 marks to be written. 8 mark or 12 marks they are written. So you can do what? You can score your marks in that written part, that 8 marks. But in the calculation part, it is a 0 if you use straight line or reducing balance. It's outright 0 when they ask you to calculate your carrying amount or something.
Okay,
So,
you said something the other time that the
yes,
method to be used is already stated in the
reflect.
question. Please,
No,
kindly refer me to where it's being stated, or
the information. I said the information. The division method they will give you an information. Is that information you now know that okay, it is production unit method. It is information they will give you. And that information, immediately I see it, I have know that this question is production unit method depreciation. Look at it here. Look at my screen. Estimated useful life of the machine in output / unit is 5 million units or output. So you already know with that information, with that one information, if I see it in the exam, I will know that I can never use a straight line or some of the year digits. I can never, because they have given you the estimated useful life. Normally in straight line or reducing method, they will give you the estimated useful life to be 5 years, or they will give you 10 years or 20 years. So when you hear years, you know, okay, straight line is reducing method. It's
but this one is in units. Okay.
Yes, but this one is in units or output. You can never use some of the year digit or production unit. You cannot use it. They have given you what you use. So hope that is noted.
All right, thank you, sir.
Yes, ma'am. Yes, ma'am. So that is the information. The information is the key. Immediately you get the information, you know the method. So assuming they give us the estimated useful life of the machine is 50 years, is 5 years, is 10 years. You use straight line, you use reducing balance. And there's something I want to quickly add. Please, let's take note. In the example, if they give you estimated useful life of 20 years or 50 years, and they not give you any method, the examiner will not talk of any method. Please use straight line method. By default, if you just hit 20 years, don't use reducing balance, so use straight line method. Use straight line method. But in published accounts, they will give you the method of depreciation. They will say it is reducing balance method. They will say it is some of the year digit method according to accounting policy of the company. But if they did not give you any method in the exam, please take note. Is it in years? If it is in years, use straight line method. If the estimated useful life of that asset is in years, use straight line method. But if it is in units, like this 5,000 units or output, it is production unit method too. So that is it. So they gave us the estimated useful life at the output, the actual output units in year 1, year 2, year 3, year 4. They give us 1,000, 1, 2, 1, 4, 800. They give us. Now they now said on September 2016, NNL decided to upgrade the machine by adding a new major component at a cost of 300,000. So my question is that as of September 2016, is this subsequent measurement or initial measurement? Hello, are we still with me?
Sir, please
It's
prove
subsequent.
Subsequent, Abby?
Yes, it's upgrade.
Yes,
It's subsequent.
Yeah,
Subsequent.
yeah. Because this is our initial measurement on 1st September 2015. That is our initial measurement. So 1 year later, immediately after 1 year later, that is it. So we now did what? They now said on 1st September 2016, they now upgraded the machine. They spent a cost of 300,000. Now, my question is that this is subsequent measurements that I just discussed about when we are doing IAS 16. So, are we going to capitalize this 300,000 or we are going to expense it? Are we going to capitalize this amount that they used to upgrade the machine? Are we going to capitalize it or expense it? You know, we talk about subsequent measurements and we discuss about it and we did what? After we discuss about it, we now left, we move. So are we going to capitalize this 300,000 or we expense it in our POL?
We expense it, sir.
We expense it. Why? Why are we going to expense it?
It's not a cost.
It is not it is a cost now. They say it is a cost. Now we used to upgrade the machine. And as a result of this new upgrade, it increased the remaining useful life to 8,000 units. Before, the useful life of the machine is 5,000 units. But as a result of this major component that they changed, it has increased to 8,000. So that is subsequent measurement, subsequent expenditure. And the standard says that subsequent expenditure should be capitalized when it increases the useful life of the asset. 2, when it enhances the economic performance of the asset. So are we going to capitalize this 300,000 or not?
Yes,
We're
we
going to capitalize it.
Thank you, man.
It's
That is it.
capitalization.
Capitalize it because it has increased the useful life of the machine from 5,000 to 8,000 as a result of that expenditure. So we will capitalize it. We will add it to the cost of the assets. So hope that is noted, Madam Gloria.
Yes, sir.
Okay. So we are going to capitalize it. And the residual value of the machine was revised to 104,000. You know, the residual value of the machine was how much before? Let me show you. They give us some information before. The estimated residual value is 90,000 before. But as a result of that upgrade, it has increased to what? 114 million. That one is 90 million. We have 1,000. So it has increased to 114 million. Now, my question is, what is the residual value? Sorry, excuse me, please. Do we understand what is residual value? Residual value. Okay, it's part of your assignment that I said you should go and do. One of your assignments. What is residual value? Anybody?
Residual value is more like the estimated amount that an asset is expected to be valued or worth at the end of the day.
Thank you very much. Thank you very much, ma. Mrs. Aisha. Thank you. You are very, very correct. So residual value is the estimated amount an asset is going to worth at the end of the useful life. I bought a machine, 50 million naira. The supplier now told me that this machine, I will give you 10 years. You enjoy it for 10 years. So at the end of the 10 years, originally, since the machine useful life is 10 years, at the end of 10 years, the value is supposed to be zero, Abi. It's supposed to be zero. But there is something they call residual value. That means at the end of the useful life, although the useful life has elapsed, there must still be a value that you can sell it as scrap. They call it scrap value. Residual value, scrap value. How much you can sell it as scrap? So that is it, 90,000. But as a result of the upgrade, it has now increased to 114 million. As a result of upgrade, that is residual value, the estimated amount that will be realized from an asset at the end of the useful life. That is residual value. So to you, and if you can remember your depreciation, what is depreciation formula? Straight line. Costs minus residual value divided by estimated useful life. That residual value, that is it. They give us. So now let's move on. Our time is going. Let's go. Let's go. Now you are required. Please don't forget. Although when we start our group account, I'll remind you. Please don't forget. Before you start any question, please let's go and read the requirement first. Go and read the requirement first. So A, describe what is meant by depreciable amount with context to IAS 16, property, plant, and equipment. What is describe? There's no action to explain or define. Just describe what is depreciable amount. So depreciable amount in accordance with IAS 16 means your costs minus residual value. So when you buy an asset, 50 million naira, now at the end of the useful life, the residual value, you now estimate that it is what? It is 1 million naira. So your depreciable amount, the amount that can be depreciable is 49 million. That means 50 million minus 1 million. So in context of IAS 16, that is depreciable amount, 1 mark. I like 3 characteristics of depreciable assets. What are the characteristics of depreciable assets? Can you give me one out of what is the characteristic of a depreciable asset? What is the characteristic of depreciable asset? What is the characteristics?
It must be tangible.
Number 1, it must be tangible.
Asset.
It must be a tangible asset. That's number 1. Okay. Number 2. Number 2, Gloria, Madam Miss Aisha, any characteristics of a depreciable asset, the characteristics, you can just pick out.
The useful life should be more than 1 year.
The useful life should be more than 1 year, fine, which is another one.
Then it is probable that economic benefits will flow.
Which will flow to the entity. Okay, thank you very much. So you use my recognition criteria, you now use it here. No wala.
So it is just find the characteristics of an asset for them. Asset has so many characteristics. So that is 4 marks, Abi. That is 4 marks. Can you see now? Now, see, they said describe 2 models of accounting for cost of PPE. What are the 2 models for cost of PPE? 3 marks. What are the 2 models for accounting for PPE? When we are talking about
Revaluation model
and
cost model.
And cost model. So can we see that in the exam now, it's not all the question that they will set as calculation. There are some written. So if you say, I like calculation, if you now neglect written, they will get that person in this question. You just lose 7 marks. That is very simple. 7 free marks. So, and that's the reason why my lecturers usually tell us then, and up till now in my ICC, that please don't only depend on calculation. It's only calculation I know. That's what I want to know. No, know about rating too. Can you see that 7 marks? And if you read very well, you can get 5, you can get 6 out of that 7 marks. Out of 20 marks, you have get 7 marks. So let's move on to C. C1. They said calculate the following. They said we should calculate the following. So now, calculate the cost of the machine, calculate the revenue expenditure over the years in the statement of profit or loss, calculate the carrying amount of the machine. So in this context, the only mark that I know that people will get in this question, very correct, is this machine cost. If you are very careful, you can get these 3 marks. The initial measurement, you will get it free. But this revenue expenditure and carrying amount, because you have to calculate depreciation. And if you don't know production unit method depreciation, you will not get your full mark here. Because if you go and use straight line method or reducing balance method, it is big. You must use production unit method for you to get your full mark here. So now let's do the first one, machine cost. They ask us to determine the machine cost. So how are we going to determine the machine cost? How are we going to determine the machine cost? So I want to quickly do something. Let me quickly do something. I want to screenshot this and I'll paste it to your group. Let me screenshot this so that you'll be giving me this figure. Somebody will be giving me this figure. I'll copy this. Let me paste it to your group because we must calculate the cost of the machine. We must calculate the cost of the machine. Okay, this is your group. Please, I have pasted the question to your group. So I need one person that will give me figure. Let me paste the remaining question. Let's have the full question in your group. Because I'll move to Excel now. I want to move to Excel. Ah, shit. Can we capture all this? Okay, I've captured this one before. Okay. Yes, I've captured that. I've captured that. So let's have the full question in our group. So that I will not come to this. I'll just move to my Excel now. Okay. So please, can we check our group now? The question is there. Can we see it? Can we see the question? Miss Gloria, can you see the question? Miss Tolani, in your group, can you quickly use your phone?
Yes.
Okay. So now, I'll stop sharing this screen now. We'll move to Excel. It is Excel we are going to solve that question. Let's move to Excel. Yeah, let's go. So can you see my Excel now? So you can all see my Excel, right? Okay. So now let's go. So A, what's the name of that company? They told us the name of that company. Is it NNL Limited? So solution CI Abi. They asked us to determine what? Please, our heading is very, very key in the exam. Let our heading be very, very key. Is mark. Determination of what? Determination. Let me use capital letter. Determination of cost of the machine. Cost of the machine at initial record. Okay, cost of the machine at 1st of August, right? I think it's 1st of August 2015. Is it 2015? I mean, which year? Oh shit. Oh yeah, let's go. So let's use it like that. Okay, 1st September, not September. September 2015. So now let's do it like this. Let's do it like this. We are going to hang three zeros, right? Let's hang it. So now what's the first item? The first item. Can you help me with the figure? The first item. Hello.
The first item is supplier's invoice price.
Supplier's invoice price, Abby?
Yes.
Okay. Supplier's invoice. How much is it?
500,000.
500,000. Okay. We have hung our power, right?
Yes.
Next.
Trade discount applicable to invoice price.
At 25%, Abby?
Yes, sir.
So, which one is applicable in IAS system? Is it trade discount or cash discount? I said it earlier. I said one is important, the other is not important. The important one is the trade discount. So we are going to deduct the trade discount. How much the trade discount?
Okay. You said
25%.
25%, Abby.
Yes, sir.
So now, this will be, so this is what we are going to do. So you find 25% of this. 25% of 500,000. That is a trade discount. That is change. So if you press your calculator, 25% of your 500,000, that will be your trade discount. Hope that one is noted. So the standard says what? The standard says we should minus it. That when you are giving a discount, you should deduct it from it. So we are going to minus it. We are going to minus it. So, and that's the reason why we are minusing it. Let me put it there so that it will not have less trade discount. Less trade discount. You less it. Less trade discount. So what's the next item? The next item.
Let me check, sir. The next item. Discount.
Yes, what's the next?
Discount applicable on invoice price for early
How much?
settlement. 5%.
For early settlements. What is that one called? What is that one called?
Early.
I think so. What is that one called for? That discount that is applicable for early settlement. What is it called? I already said it on this call.
is it not cash discount?
Thank you, ma. Yeah, God bless you, ma. God bless everybody. That is cash discount. They can use any English to, and that is the problem of I can know. They will just use English to scatter your head in the exam. You will now think that you don't know it, and you know it. You know it. You know it. That is cash discount. I explained cash discount and trade discount. Maybe when you are listening to the recording again, I explain it. That cash discount is not applicable to IAS 16. It is only trade discount. So whenever you see cash discount, you will ignore it. You ignore it in the exam, or ignore it. You don't need it. Please, let's move on. What's the next item? What's the next item?
Freight and shipping cost.
Freight and shipping cost.
To the tune of 100 million.
100 million. So freight and shipping cost, are we capitalizing or expense? Are we capitalizing or expense? Is it attributable to the machine? The freight and shipping cost, the freight that we spent, the amount we incurred for freight and shipment. Are we capitalizing?
We're expecting it, sir.
Yes. Yes.
Are we expensing or capitalizing?
We need to capitalize it.
Why?
Because it's one of the costs that we're going to add with the initial cost of the item.
Thank you, ma. Please, there is a key word I want everybody to know. Please, let's take note. If you have a jotter, please jot it. It is a key word. The cost must be directly attributable. It must be directly attributable to that asset. Freight and shipping cost. For you to buy a machine, you must pay a freight or a shipment cost. It is directly attributable now. So we will capitalize it. That name alone, freight and shipment cost. Because if you not pay, they will not ship that machine to your office. There's no way. Or is the machine going to disappear? No. You are going to carry it. It is capitalized. So it's 100,000, right? Yes. The next one is what? The next item. The next item. I think I can switch so I'll be faster. Let me switch to my WhatsApp so I can be faster. We are getting slow and time is going. The next one is Steve door expenses. Steve door expenses. Steve door expenses. Now, what is Steve? Who have heard about Steve door expenses before? Steve door expenses. Has anybody heard about that expenses before? Not, I don't want to know. I'm not asking of capitalization or expense. So what is the meaning? Have you heard about it before? Please, that type of expenses that you have not heard about before. You have never heard about it before. Please, anything your mind say in the exam, you can either capitalize or expense it. So, Steve door expenses, when I just research about it, it means it is like a labor expenses. The labor that will help you to carry that machine. It is called Steve door expenses. When you have the time, you can search it. So it is directly attributable to that product. It is how much? It's 20 million naira. We will capitalize it. Then the next item is what? The next item is initial operating losses. We don't need that one. We will expense it. The next one is handling costs. Handling costs. Handling costs, we are going to capitalize it. The people that will, just by the name handling costs, we are going to capitalize it. How much is it? I can switch to my WhatsApp now. I think I can get it very fast now. We need to be very fast. This is almost 7 o'clock. The next one is what?
Mr. Taufik.
Yes.
Hello, sir.
Yes, I
I
can hear
want to
you.
make a
Go ahead.
request. Okay, I want
Okay.
to make a request.
Yes.
For easy assimilation of this particular aspect that we hear now. Now,
Yes.
maybe the note already given. Maybe you can help
Yes.
us state all the items that are under capitalization and the ones under the one that goes for expense. You
Okay.
understand? So in case
No,
if we come across it in the
no problem. No
exam,
problem.
so we'll be
I will
able to differentiate it.
That is it.
Mm.
That
All the
is a good idea.
items to be capitalized and
Yeah.
the one that falls under the expense.
Yes, no problem. No problem. No
Okay,
problem.
thank you, sir.
No problem. So electrical, however, there are some costs that if they list it out for you, if even in the textbook, you are not going to know. Maybe it's capitalized or expensive. You are the one in the exam, or you are the one that will use your professional judgment. Are we going to capitalize? Even up till now, there are some costs that and that is the reason why I said in the exam hall exam hall requires thinking. We have to think. Am I going to expense this cost? There are some costs you'll be seeing for the first time. But I'll add all those one. No. You know, I've already said it. I've added it, I've done everything. I will add it and I will update it. Revised, I'll send the revised one. The one will expense, the one that will capitalize, I will add it. But so
Thank you.
the next one is electrical and installation cost. That one too is capitalized. Why? Because for we to use that machine, we must install it. So the next one is interest on loan to the power of usage, interest on loan after usage. All those ones, are we going to capitalize or expense? Interest on loan to the point of usage, interest on loan after usage. Are we going to capitalize? Mrs. Gloria, are you still on this call? Have she have left? Has she left?
No, sir.
You are here. I think you have run away. Let's watch this film together. So interest on loan, you are not going to capitalize it too. They are going to be expense. It is only interest.
P&L.
It will expense in the P&L, yes. So it is only interest on qualifying capital expenditure that you capitalize. So pre-operational expenses, expense, staff training in the use of machine. Please, this is a technical question. Are we going to capitalize or expense? Staff training in the use of machine. The staff that will use that machine. Are we going to capitalize it?
Yes, to be capitalized.
Yes, Abby. What about
Yes.
Gloria? Are you going to capitalize it?
Sir, it will be capitalized.
We are going to capitalize, Abby.
Yes, sir.
So, and that is why I quickly threw out that question. When me too, I was doing my ICANN. When I heard it like this, I told my lecturer, capitalize, capitalize. Please, you are not going to capitalize it too. Please, you are not going to capitalize staff training. No. It is a trap. Staff training will not be capitalized. Why? The reason why is that although it is a directly attributable cost, when you look at it, for them to use the machine, they will train them now. If you look at it, you argue that we are going to capitalize, but it is a trap. You are not going to capitalize it. Why? Because it is not directly attributable to the machine. It is not directly attributable. It is not a directly attributable cost of bringing the machine to the present location and condition. Any cost that will be capitalized, the key characteristic is that it must be attributable to bringing the assets to the present location and good condition. Any cost. So that staff training cost, it is a cost that will be incurred after the machine has been set up. After the machine has been completed. So it is not a directly, it is a trap. When you look at it, you use it's capitalized. No, it is not capitalized. Please don't fall in that trap. Staff training is not. I'm going to add it to the notes I said I will send. Staff training is not going to be capitalized. In context of IAS 16, there is a cost called installation cost. It is only installation cost that will be capitalized. When you hire a technician that will help you install a machine for it to be working, and there is a cost to testing cost, that testing cost is also a cost that you capitalize. So the person that will help you test it and that will help you install it, automatically he will tell your staff, this is how to run the machine. This is how to operate it. This is the temperature you put the machine. The person it is the responsibility of that person to tell you. You have already paid for it. So for you to now spend extra 5 million on training staff again, after the technician have explained to you, IAS 16 say no, that cost is not a cost. You should expense it. Hope that is noted. Hope do we note that?
Yes, thank you.
Okay. All right. So now let's move on. Let's finalize this. Let's finalize this. Now the next item is what? Professional and consultancy fee on advice to buy the machine. Are we going to capitalize this or expense it? Are we going to capitalize or expense this? Professional and consultancy fee on advice to buy the machine. 30 million naira. Are we going to capitalize?
No, we are going to expense this one also.
Yes, we are going to expense. We are going to expense it. No, we are going to expense it. Why? It is just like a cost that does not make sense. Because one person now advised us that we should buy the machine, we are not going to pay 30 million. We are going to expense it too. Please, let's expense it. So, and that is it. Now, the next one is purchase of 4-year maintenance contract. That is maintenance cost. You are not going to capitalize that one. Now, pre-production testing costs. Pre-production testing costs. Are we going to capitalize that one or not? Are you going to capitalize or expense? Pre-production testing.
Capitalize. It's pre before.
Exactly. Thank you very much. We are going to capitalize it. Why? Because before your production, you must test it very well. Okay, does this machine, is it working perfectly? Is it fine? Hope is going to produce the goods that our customer needs. So you must. So that's that about that. So it is a capitalization cost. So what is it called? Pre-production testing cost. How much is it? Equally 30 million naira, which is 13,000. So the last one is residual value. And I have said it earlier, residual value will be deducted from the cost to get your depreciation. That is not a cost. So what is the total cost of the machine? So the total cost of the machine is 548 million naira. So this is your 5 mark for C1. C1 5 mark. Can you see? We are done with that. Out of all those costs, majority of them are what? Majority of them are expense. We are not going to capitalize it. So now let's move to the second part of the question. What is the second part? They said we should do what? The second part of the question, they said revenue expenditure over the years in the profit or loss account. What is the revenue account? What are the expenses you are going to recognize in your profit or loss account? So how many years did they give us? If you go back to your question, they gave us 5 years. They gave us 5 years. Accounting year 36, 8, 20, 2016, 17, 18, 19. So they asked us that what are the expenses you recognize in your P&L? You know, we are asking questions this morning. Capitalize or expense, capitalize or expense, capitalize or expense. Abi? Now they are now asking us that what are the revenue expenditure that will be recognized that you expense in your profit or loss account. That is our, and this is what we are going to do. Let's quickly do it. This time for Salat. Can we see? Oh shit. Okay. Revenue expenditure to be recognized over the years. Right? How many years did they give us? They give us 3108 2016. They give us 16. They give us 17. They give us 18. They give us 19. So, Auntie Gloria, are you here?
Yes, sir.
Okay. So, please help me look at the question. The costs that we are not going to recognize, that we are going to expense, can you list them out for me? There are some costs that we are going to expense. If you go back to that question, there are some costs that we did not capitalize. Abi, we did not capitalize them. We expense them. You are not going to give me those costs now. Number one. What is the number one? The cost that we are not going to capitalize. So,
Initial operating losses.
initial operating losses, Abi.
Yes, sir.
Initial operating losses. The next one. How much is that one?
Initial operating losses 10,000.
Losses 10,000. Okay. Then which one again? Next one.
Interest on loan to the point of usage.
Interest on loan to the point of usage.
Yes, sir.
Point of use. How much?
12,000.
12,000. Then the second one is interest on loan after usage.
Yes, sir.
I can change this one. AU after usage. How much?
After usage 18,000.
18,000. Okay. Which one again?
Pre-operation expenses.
Pre-operation expenses.
5,000.
5,000. Which one again?
Staff training in use of the machine. 4,000.
Staff training. 4,000. All those costs that we expense, they ask us to show it in our P&L. So these are our P&L. Then which one again?
Professional and consultancy fee on advice to buy the machine.
Professional. Okay. Now, there's one thing I want to see. Now, this professional and consultancy fees, on advice to buy the machine, we concluded that it's going to be expensive, abi?
Yes, sir.
But in ICANN's solution here, they capitalize it. Do you know why they capitalize it? I didn't quickly see it. This consultancy fee that was added to it, that's the reason why they are going to capitalize it. Please don't let us sleep over it. If peradventure this thing is professional fee or like expenses for advice on something, it's not going to be capitalized. Oh. If they call it expenses on advice, but since it's a consultancy fee, that's the reason why they capitalize. Hope you take note of that.
Yes, sir.
Please, since they call it professional fee, if you remember when we are dealing with IAS 16, there is a professional fee there, Abby. Professional fee is part of the cost. But if they say cost of advice on how to buy the machine, please disallow it too. Please, you should expense it too. Please, we should expense it. It is very, very important. We will expense it. But since it's a consultancy fee, especially this consultancy and professional, that's why they capitalize it. So what's the next item? The next item is what? After that one.
Purchase of a 4-year maintenance fee.
Okay. Maintenance fee, the purchase of 4-year maintenance contract. Okay, purchase of 4-year maintenance contract. How much is that one?
120,000.
How much is it? 120, Abby?
Yes, sir.
120,000. Okay. You know it is a 4-year, Abby? 4-year. So, and in the year one alone is what we need. So we are going to divide it into 4. Hope you take note of that. You know they call it 4-year maintenance. So since it is 4 years, so in a year, how much is it going to be? 120,000 divided by 4.
30,000.
30,000. Please, that is it. So this one is 30,000. Then I can drag this. So they will incur 30,000 every year. So there's now there's one cost that they will incur again. It is called depreciation. We are going to expense the depreciation. So that depreciation, there will be a workings for it. Workings. That will be working notes. Is when we get that depreciation, that's when we put it here. Then we now get our sum, our total sum here. Let me use our Excel to sum it up. So that when we input the depreciation, the answer will just pop up. So let me insert this. How much is it? Let's hang our 1,000. Let's hang our 1,000. So that's fine. So now let's move to the last one. They say we should determine our carrying amount. Abby. So for we to determine our carrying amount, Miss Tolani, are you still here? Hey, I can't hear her voice again. What is SALO? Determination of carrying amount. So to determine our carrying amount now, we'll be deducting our cost minus what? Minus depreciation.
I'm seeing the class.
Okay. I think you have run away. Please don't run away. Let's watch this film. So let's determine our carrying amount. So for us to determine our carrying amount, we need some items. So we need a depreciable amount. What is depreciable amount? Let me ask again. That is our question number 1A. They ask us what is depreciable amount. What is depreciable amount in context of IAS 16? Depreciable amount. That is cost minus residual value. Cost minus residual value. That is your depreciable amount. So we need a working sheet. We need a working sheet. After that, we need our depreciation. So when we get our depreciation, we can now determine our carrying amount. And what is carrying amount? Cost minus depreciation. Carrying amount. Carrying amount. So now, what do we need? We need years. We also need years. Let me insert a year here. Yes. I think we need years here. We need year 1, we need year 2, we need year 3, we need year 4. So at the end of year 1, let's copy and paste here. Let's use here. Let's use here. So at the end of year 1, what is our depreciation? What is our depreciation? So our depreciation at the end of the year 1. What is the cost of the assets? You know, we have calculated the cost of the assets here. This is our total cost of the assets. Let me do this. Total cost of the assets. Total cost of the machine. Total cost of the machine is 578,000, Abi. Please, Auntie Gloria, are you still here?
Yes, sir.
So 578,000. How much is our residual value? The last value in the question, they give us a residual value. How much is it?
90,000.
90,000, Abi. So
Yes.
90,000. So that is our depreciable amount. Costs minus depreciable amount. Costs minus residual value to give you your depreciable amount. So if you do this 578,000, Abi, minus 90,000 minus 90,000. 578 minus 90.
488,000.
488,000. So this is the depreciable amount. This is what you use to depreciate the asset. Now, please help me go back to the question. What is the output? The total output that the useful life of the machine. They give us 5 million now, Abi. The useful life of the machine.
Yes, sir.
Is 5 million, Abi.
Yes, sir.
Now, at the end of the year 1, what is the output in year 1? Year 1 output. Year 1 output.
1,000 naira.
1,000. Thank you. So which is 1 million? Let's hang our 1,000. Let's hang it. This one too is 5 million. Although it's 5 million, but let's hang our 1,000. So now, for us to determine our depreciation, now it will be that 1,000 divided by 5,000 times your depreciable amount. How much is our depreciable amount? 488,000. So if we press our calculator, what is it going to give us? What is it going to give us? 1/5 over 488. 1/5. 1/5 over 488. What is it going to give us?
97,600.
So our depreciation is 97,600. So since we get this depreciation of 97,600, we can paste it here. This working note here, you can paste it here. So this is your year 1 depreciation. We'll calculate year 2. You calculate year 3. We calculate. But now to determine our carrying amount, what is carrying amount? Cost minus depreciation, Abi. Should be cost minus depreciation. In year 1, cost minus depreciation. What is our cost in year 1? Should be this amount, 578,000, Abi. Our cost in year 1 is 578,000. Let me put it here so that when you are looking at it, 578,000 minus our depreciation, 97,600. Okay, Excel is telling us that there is something. Okay, I know what happened. This is actually what happened. I put comma here. Excel will not accept it. Excel will not accept that. So this is our carrying amount in year 1. Let me put a note there so that when you are reading on your own, this is past question. Please, let's talk. If it's not, if there is question, please let's talk. We don't know what I can set it again. Cost minus depreciation. If there is a question, let me know. So that is it. Cost minus depreciation. Cost. Let me put it initial costs. Initial costs. Initial costs. So when you click on this cell, Excel will give you what we get. Hope you understand. Initial costs that we calculate in CI minus depreciation, you get this amount. Let me put it by the side here. That's when we are looking. So at the end of year 1, that is it. Now, where are we moving to? They said, okay, I think there is something we skip. Oh. We did not skip anything now. Now, let's move on. We did not skip anything. Yes. Hello. Are we together?
Yes, sir.
Okay. Now let's move to year 2. We are done with year 1. Let's move to year 2. Please, let's move to year 2. Now, this is our year 2. Now, year 2 now. We now have a calculation in year 2. They said, they gave us one information. At the end of year 2, they said there is a cost that was capitalized, right? So how much is it? Let's look at it together. What? So that subsequent amount will be 480, 400 plus the subsequent expenditure that was incurred, which is 300,000. You remember this 300,000? The subsequent expenditure, which is 780,400. So this 780,000 is the new cost in year 2 because 300,000 was added to it. Are we still together?
It's like Mrs. Tonani's speaker is on. She should mute herself.
Okay. My voice is now echoing, Abby. Okay. So now let's move on. How I get this 780,000? Is it well explanatory? Please let
Yes,
it be. Please let it be well explanatory because as a year 2, we spend additional 300,000. So our depreciable amount in year 2 will be 780,400 minus residual value. They said there is a new residual value, 114. They give us for that information. When you subtract it, you get 666,400. That will be your depreciable amount in year 2. As a result of what? Let me put it here. That expenditure, upgrade expenses. That 300,000 is an upgrade that will be capitalized. So now the output is to 8,000 units.
sir.
If you remember very well.
Sir, this 300,000, the question I'm seeing is for 2016, sir.
Yes, this 2016, Abby.
Yes.
Which month? That's year 2. At the end of year 2. That is 1st of September. That is year 2. At the end of year 1, it is year 2. That is the new cost for year 2. So this is year 2. It's not in year 1. So this is the new cost, 780,400 in year 2. You know, we are calculating depreciation for year 2. So this is it. Hope you understand now.
Yes, sir.
Okay. So that is it. So now let's calculate the depreciation. So the depreciation will be how much? So if you check the question, they gave us the output in year 2, which is 2,400 over what? Over 8,000. That is the output, the new output, which is 8,000. So when you press your calculator, we have a new depreciable amount of how much? 666,400. That's a new depreciable amount. So how to get this depreciation? Let me show the workings here. You said output over total output. Output over total output multiplied by depreciable amount. So in case you are doing your own, in case you are solving on yourself, if you want to get out output over total output times depreciable amount. So this is your depreciable amount. Can you see? The output is given in the question. The total output too is given in the question. So when you press your calculator, what are you going to get? So you are going to get 199,200. Right? Are we correct?
I got a different answer. Maybe I didn't calculate well.
Press your calculator again. 2,400 times over 8,000 times 666,400. What did you get? 199,000. Sorry. 920. Yes. Is it correct now?
Yes, sir.
So you can paste your depreciation here. So this is your depreciation in year 2. So what will be your carrying amount? Your carrying amount will be 780,400 minus your depreciation 199,920. So this will be your answer, 480,000. So let me show it here. 780,400 minus depreciation. Year 2. So that will be your. Now, year 3 will be very, very easy. That will be copy and paste. So year 3 will be in 2018. Copy and paste. So your depreciable amount will be the same because we did not incur any additional cost. This one too will be the same, but this one will change. So Glory, please help me press calculator. The output in year 3 is 2,800 divided by 8,000 times 6,600. What is it going to give us? What is it going to give us? What is it going to give us? Are you here?
I got the same answer. 199.
No, this one is 2,800. It's not 2,004.
Okay, 2,800. Sorry.
Yes.
2,800 divided by 8,000 times 6.
So we are already giving all these units in the exam, in the question. Year 1, year 2, year 3.
40.
What is it?
233,240 naira.
233.
240 naira.
240. So that's the depreciation. So our carrying amount will be what? Will be our cost minus accumulated depreciation, which will be 780,400 minus one depreciation 99,920 minus 233,240. You now press your card. This will be our carrying amount in our year 3. This will be our carrying amount in year 3. So let me show it here. So that if you want to get your car, if you want to sell on your own, it will be 780 minus year 2 depreciation minus depreciation year 3. Year 3. So that is it. Then the final year. Abi? Yes, that's the final year, which is 2019. 2019. They give us, that will be the final year. But yeah, let's finalize everything now. So what's our production unit? Our production unit is how much? 1,000 plus 400, 2,400 plus key. Our production unit is, the last year is how much? The last year is 800. Okay, 1,000, 1, 2, 1, 4, 800. Okay. So, okay, there's an adjustment that we need to make here. Our year 1 is 1,000. Our year 2 is 1, 2. 1, 2. So this will be 2, 2. This will be 2, 2. This will be 2, 2. It can never be. So these are our production units. Is we need to adjust it. Are you seeing my screen? People are not seeing my screen again. You cannot see my screen again. There is something I'm
with you, sir.
Okay. Now, this output they gave us in the question. In year 1, they gave us 1,000. But in year 2, they gave us 1, 2. So we are going to add 1,000 to 1, 2. It will give us this. So help me press my calculator. What is here? Then I'll press my calculator here.
183,260.
183,260. 260. Okay, what about this one? Please let me give you figure.
The 28, are we not changing it?
We'll change it, yes. We'll change it. So 2,200 plus 1,4. 2,200 plus 1,4. What is it going to give us?
So 99,880.
This is 299.
880.
880. Okay. Then this one. What is this one going to give us?
It's 3. Is it 336?
Okay, 36. 3,600. Then that 36 plus the year, the last year. Okay. 36 plus 800. I think that is 34. Yeah. This one will change.
That is
Okay.
44.
44, Abby?
Yes, sir.
Okay. 183. So, and that is ICANN for you. There are some crazy questions you see in the exam. Please, don't let them scatter your life. Anything you can do it. Move to the next question. Imagine we are solving this question in the exam. Just imagine. What will happen? So, now this one. How much is this one? 3,400.
366,520.
366,520. They made a lot of error in this question. In Pathfinder a lot of error. So that's why we need to correct it. So let me copy this and paste it here. Okay, so is this one I'll copy and paste.
Sorry, Mr. Taufik, I was the one from the class.
Which one? I can hear you. Which one? Which one?
Hello?
Yes, I can hear you. Which one? Hello? There's a lot of error in this. Okay. A lot of error. Sorry. As a lot of error in this question. Mr. Lani, what are you saying? I can't hear you. Sorry, Glory. Can
Yes,
you
sir.
help me with go back? Let's finalize this. Okay. Let's use that output. Normal output.
Okay.
Yes. There's a lot of error here.
Okay, sir.
A lot of error. Oh yeah. I can't hear what Mr. Lani is saying about though, because the useful life of that asset is this. Oh yeah, can you give me this figure now? Don't worry, let me use Excel. Don't worry, so it will be fast. It will be fast. Let me use Excel, so it will be fast.
Hello, Mr. Taufik. Well done, sir.
Yes, I can hear you.
In fact, I'm having a class now. I've already projected my mind down. When you said that the class will end by 7.
Yes. Yes,
I'm having another class now.
Yes, no problem. You can join your class. The recording, you join up with the recording, yes.
In fact, okay.
Yes, no problem. Bye now. We are done already. So Glory, are you there?
Yes, sir.
Yeah, so we are done with the question. There's a lot of error in this question. So this output over total output times depreciable amount, that's going to give us our depreciation. Can you see? That will be our depreciation. So this will be, let's do the right thing. This is the right thing. Do the right thing. There are so many errors in Pathfinder's solution. So many errors. And I want us to do the right thing. They too, they know they did nonsense. What they did is they can't even explain it. So that is it. So, but this production unit is not common. No. It is that straight line that is common. So that's all. That's the end of the class. Let me remove the last one. Sure. So, because at the end of the 4th year, we said the useful life of the machine is 8 million units, and they incur this cost. So automatically, there will still be a value. If you add up all these costs, it's not up to 8,000. So what we are getting the other time is very, very wrong, because this carrying amount has reduced drastically, which is wrong. So this is the correct amount. So at the end of year 4, year 5, year 6,
the machine is still going to use a lot. So that is it. So, Glory, are you there?
Yes, sir. I'm with you, sir.
So that is the end of the solution. So in case you are now solving it on your own, if you have any issue, please let me know. Just highlight the Excel where you need clarification. This is the correct. But in the exam, don't waste time like this. So don't waste time. Just do the one you can do and leave it. This is just 5 marks. Imagine we are wasting like 30 minutes on 5 marks question. How many minutes are you going to use in the exam? So that is it. So if you have any other question, let me know. Yeah.
Okay, sir. Thank you, sir. I appreciate, sir.
You are welcome.
Sir, please, another thing, this conceptual framework,